Right, stock market update, 12th of May. What happened this past week in the stocks that I've bought and and what's happening in the week ahead. And there's just two letters to mention, AI. Let's have a look at the stocks and where the money's being made. Okay, so first things first, where are we on valuations? Price earnings ratios, everything looks expensive. You know, there are some companies in the history of corporations where you can't just say, oh, I think next year its earnings or profits will be up 3% or 5% or whatever else. They instead devise a way of just printing money. And you do not know what the future is going to be for them, because if you did, you'd have invented it. Microsoft is in that category at the moment, so is Alphabet in that category through AI. And I've looked at their earnings transcripts. I have gone through what they've done on their broadcasts, and Pichai did, the CEO of Google, and they keep mentioning AI, and Microsoft doing the same. A year ago, Microsoft did not have their investment in ChatGPT. They did not have, oh, we'll just charge everybody $20. And to be honest, they could have charged me a hell of a lot more. So they're in that category. Tesla for a while was, but it's just too volatile. And sometimes it is, and sometimes it's just, 3% more in car sales. And sometimes it's, they're going to invent, time travel. So those two go into that special category. To some extent, Apple doesn't quite yet at the moment, and Amazon doesn't yet, but they'll catch on and they'll know we better get onto this AI thing to get in there. So everybody else, same as before, and they're all overvalued with the exception of energy, which looks boring in comparison to AI, and banks, which look cheap. And I'm going to do a separate presentation on what AI said to me were the best stocks to have in a rising interest rate environment when I put all the statistical data into it and all the financial data, and banks came up, and I'll put a separate presentation on that. Anyway, for now, how was the past week? Well, you can see Alphabet up 11%. Yeah, that's right. We made 11% in a week on this, and we're overweight. Well, overweight. I'm overweight anyway, but overexposed perhaps. Concentrated in is another word. Amazon, Alphabet, Microsoft, Apple, and everything else that we're in looks boring by comparison. In hindsight, you might say, why the hell did you have any Visa, MasterCard, Disney, Criteo, whatever else, Cambian networks? And you're right. Why did I bother? Why did I bother having anything else other than just those? Okay, and a bit of Tesla thrown in since the start of the year. But I'll explain why I had some of the others in a moment. But that's where we are. And this isn't going to change very quickly, I don't think. And let me put it this way. Let's say they dropped 30%. Am I worried if Apple drops 30%? No, I'm not. I'm not, because I don't think I'm going to drop dead the day after or by it dropping. I'll probably buy more, or I'll say, fine, it's Apple or it's Microsoft or Alphabet. And as my wife says, they pay the big bucks just to pick those names. I said, yeah, guess what? People don't do it. Instead, they give it to a sodding fund manager who buys 0.01% of it and a load of crap to go with it. So there you go. This is price earnings growth ratios, what you see on screen now. And these price earnings growth ratios, which I'll return to in a second, suggest everything else, again, is overvalued, which is why some of the misery guts who are saying the world's going to end and go up in flames and there's going to be an alien invasion and a stock market crash, it's because they're looking at figures like this. And to some extent, they might be right on that. NASDAQ up 22%. 22%? A fifth? And most of that is the stocks I've already mentioned, Apple, Amazon, Alphabet, Meta. Up 22% since the start of the year. What the actual heck? Okay, that's extraordinary. Forget everything else. What's the point of me looking at the S&P or the Dow or even the UK markets, right? It's up freaking 22%. And their names, which I don't mind having in my portfolio. Let me put it this way. My wife is not going to shoot me for having the companies I just mentioned. Nobody's going to get sacked owning, it used to be IBM, now it's going to be owning Microsoft right now. The S&P 500, let's just draw that chart. And by the way, if you're not excited about AI, you probably haven't got a pulse. And you need to get one. So that's where we are at the moment. Yeah, there might be a week or two of some profit taking because it's just risen so much so quickly. And some of you might say, yeah, what about interest rates? 22%. You think I'd give a damn about interest rates when I'm making 22% since the start of the year in just the NASDAQ, let alone those individual stocks? Okay, so that's the direction we're still going in. And for all the people who think, no, it's going to crash and burn, yeah, some people are just congenitally miserable. We know that because if you look at social media comments, you can see some people are mentally ill and others are just congenitally miserable, and they just think that's going to happen, and they keep saying if it happens often enough, they say it often enough, maybe it'll happen, because they just want everything to crash and burn. That's their problem. But that's where we are at the moment, and I'm pretty bullish. I think this is what's going to happen. It's not going to happen across the board. Like I just told you, it's going to happen in the tech stocks that I mentioned. What about others? Well, let's have a look at some of the others in just a second. The UK, fine. You know, we've got this thing going on. It's a bit overbought, could drop, yawn. Apple, what do you want me to say? It's that child you have at school who keeps getting straight A's. And that was me, by the way. And the parents don't even bother coming to parents' evening because they know it's just all going to be amazing. I mean, yeah, okay. All these people are excited about it, from Bank of America, Morgan Stanley, and the conspiracy theorists, and there's a lot of them on social media. Well, they're just all lying. They just want you to buy it because they're actually selling it, and the prices are not actually going up. It's the matrix. There's some really crazy people on social media. Okay, so this is where we are with it. The direction's going to continue going up, and I'm happy with it. And even if it dropped 30%, 40%, 50%, which it's not going to do, I'd be fine with it. We're making money. And this is where it's going to go, 210. It's currently at 173, and it'll do that within a couple of months probably. Alphabet, you can see the direction of travel, and I've been saying this for months, and I've been right since the start of the year. But I've been wrong in that I didn't put all my money just in this. And I said at the time, you know, in hindsight, and I'll say it again, in hindsight, I'll regret not just having money only in this and nothing else and leverage to the hilt. That's just the way life is, isn't it? I'd have to stop working if I did that. You know, as my wife says, I'm really worried if you become too rich that you'll stop loving me. And, you know, so she wants me to keep going to work, so not to make too much. But that's what Alphabet does. It just gives you too much. It's freaking crazy. Okay, that's where we are. And that's the high projected by the analyst. The average is 130. It's currently at 116. Can it do that? Hell, yes, it can. By the end of the year, at the latest, probably. Microsoft, as I've said, you follow me and you think, okay, they pay you for this? Yeah, they do, because people don't bloody listen. So I get paid a lot of money to just keep saying the same old thing. And at the moment, it's the thing to say. It might not be. Wasn't last year. Last year was, ooh, we better sell and buy back cheaper later. But this year, cautiously, I didn't get in at the bottom round there, but cautiously it's been more and more and more. And I think I bought some more this week as well. I've lost track because every time I look, I think, what shall I buy? I'll buy some Apple, Microsoft, Amazon, Alphabet. Actually, there's been a splurge in Alphabet, which I didn't have as much of as I should have done. I had a fair bit, but not as much as I should have done. Microsoft, there you go, 310, 420. Can it do that? 33% rise? Yeah. By the end of the year? Yeah. Okay, what do you mean to tell you? So this is where we're looking at. Yeah, it dropped off a cliff last year, 54%. What the hell's wrong with the market? It dropped 54% in a year. Why? Well, because the market's wrong. And excuse me, I've got a bit of a sniffle. And that's the direction it's going to go in. They all seem to think so. And are they going to mention AI? I bet they bloody do, because when I listened to Alphabet and their broadcast, all they ever did was just mention AI. In fact, the more often they mentioned it, the more the share price went up. Where are we at the moment? 112. Double your money by the end of the year. I'm not sure about end of the year, but even if you double your money in 3 years, you're happy. Can you do that? Just buy and hold for 3 years? Maybe. So why have I got Disney when it's fallen back on the mat and every time it rises it keeps falling? Well, I do want some diversification. That's my problem, not yours. And would you buy Disney when you've got Microsoft? Of course you wouldn't. So why the hell you got it, Alpesh? Well, I just wanted something other than the 4 tech stocks. And these guys seem to be bloody excited about it. That's not the reason I bought it, but they seem to be excited about it. That's the price at the moment. The average predictions, rather. That's the low predictions. Disney's at 92. They think it's going to double. Will it? Well, I think it's a great franchise. I haven't got an issue. This is an AI play. Okay, it's NVIDIA. Near all-time high. So if you're risk averse, you'd want to get out now. Because remember, we got in, if you've been following my Telegram channel and all the rest of it, we got in January into that one. And it's been probably the best performer, or one of the best performers. Probably the one, actually. So it's time to get out. Yeah, because it's looking a bit overbought. So maybe not get out 100%, but maybe 50%. of it, take some profits if you're more risk averse, and some think it's still got a long way to go. 355, it's currently at 285, so you might only sell half of it and keep the other half to run. Tesla was supposed to be one of those companies who, are they in car making or are they in time travel? Well, who knows? Okay, there you go. Kathy Wood calls, by the way, she's going to come out with a ChatGPT picked stock ETF, all right? Because she knows it's all about marketing, it's not about returns. And that's where she says it's an AI project. Of course she says that. She's not stupid. She knows how to market. If she says, because she owns a shed load of it, and if she says it's AI, then she knows it's going to go up because that's the phrase of the month. But these companies really are delivering on the artificial intelligence. If you look at, my wife asked me last night, she goes, what time did you get to bed? I said 2:30. She goes, why? I said, well, I was looking at Bard, Google Bard. Now across the company, we can deploy Google Bard. We couldn't do that until 5th of May. So that's why. And that's Tesla. Okay, Meta. I didn't know that was going to be a V-shaped recovery. If I did, I would have put more money in. My biggest regret so far this year, I just didn't put more. I wasn't bold enough. I didn't put even more money into the tech companies. I wish I put more in. Really, I wish I eBayed my mother-in-law and with the money I got, even put that into these stocks, but I didn't. So that's where we are with Meta, and I ran positive. Don't forget my campaign for 1 million to teach 1 million people how to be better investors. Follow me on Telegram if you want to see the weekly updates, and on YouTube as well, and follow me on LinkedIn as well, and campaignfor1million.com. Thank you very much, and whatever you do, remember the future is most definitely AI.